The stock reaction maybe tells you a little bit about just what the verdict is. There is optimism. Is there as much optimism about Disney, given what you heard last night, as there should be?
I don't know if there's a lot of optimism out there. I mean, I would describe the sentiment on Disney stock as probably the worst it's been in 20 years, and it really has to do with big structural issues. What is the future of Hulu? What is the future of ESPN? And then there's concerns about cyclical risks in the parks. And so until we get clarity, at least on those first two issues, we're just sort of muddling through quarter to quarter, and the stock will react to the earnings. But those are the two big elephants in the room.
I mean, you're right, because on a year-to-date basis, that stock is pretty much flat. I mean, I think it's up a couple hundred basis points, maybe 2-3%, something like that. But last night's call did at least give some semblance of positivity to this idea that the streaming business is a focus for profitability. The losses narrowed and that the trajectory might be right. Is the price hike campaign one that you think is the right one for Disney Plus?
It is the right one for Disney Plus. It's right for the overall industry. I keep this very simple. The average linear pay TV bill is $105 a month. There isn't a single streaming service out there that costs $20 a month, and most consumers don't have 5 of these services. So all of the introductory, very low-end prices to drive sub growth are coming to an end, and we're getting back to more normalized pricing. The other interesting facet of this is they didn't take prices up on the ad-supported tier, which speaks volumes to where Disney wants to direct the consumer to go in and take the product with ads, because they're going to generate a lot more revenue on that front with all the better pricing that comes with web-based advertising as opposed to linear.
All right, so Jason, the streaming side is obviously a key focus here. We also mentioned the park side of the business. Disney's been the high-profile target of a political kind of tug of war that's developing right now, maybe even a cultural war, if you want to call it that, in America. The park attendance numbers and the park results, while they did beat some analyst estimates, are still showing some signs of a slowdown. How much do you think Disney is going to either benefit from a rebound or perhaps be dragged lower by a continued slowdown in that park side of the business?
Yeah, it's really interesting. The street was very nervous about the park numbers, and you rightly point out that Mr. Iger was sort of signaling some softening. I'll tell you, this is very, very strange to me, because Disney's attendance numbers at Disney World, last fiscal year were 20% below 2019 levels. And a lot of the things that Mr. Iger highlights, like lower hotel tax receipts in some of these key counties inside Florida, is technically true, but a red herring, because we were coming off record levels of hotel receipts. And so he's sort of signaling that there is going to be a slowdown at Disney World, but I do sort of wonder if it's company specific, right, as opposed to something that is really more macro based. And that sort of hints at that cultural issue that you alluded to.